I fully expect that even before the halving, I'm kind of with Adam back. I think before the halving we'll probably be at 100. That we're going to kind of march from here to 100. And I think this next run with the approval and the halving taking place, it would not surprise me at all. I mean, Max Kaiser thinks the top's at 220. I think the top could be 3, 4, 500 on this next run.
Mm.
And then in turn, by the way, it'll correct, just as it always does. But if you kind of look at the patterns of the multiples of the bases that it forms, I tend to believe that we're going to go substantially higher than where we are today. And that's probably in a 25-6 scenario. I mean, I'm not sure that happens in 2024. I would guess the average price in 2024 might be in the hundreds somewhere. But then it really starts to ramp higher as more and more people, get involved.
Today we have Larry Lepard giving his Bitcoin price prediction as the US dollar comes to an end. In light of the Bitcoin ETF that investors are eagerly anticipating, Lepard believes this is only the beginning. He discusses that as people become more aware of the dollar's depreciation, they'll gravitate toward assets like Bitcoin, not only because of its store of value, but its scarcity and limited supply of 21 million coins. Lepard says this will be central to Bitcoin's long-term price increase, and while he acknowledges that Bitcoin's journey will be volatile, its success is a certainty. He predicts Bitcoin will hit $100,000, and because of the ETF and institutional adoption, it makes a clear path to a minimum of 300,000 within a year of its first six-figure price point. Governments have attempted to slow down Bitcoin's progress by making it more difficult to enter and exit crypto markets. But despite these challenges, Lepard believes this actually demonstrates Bitcoin's lasting presence and solidifies its position as the currency of the future. Let's get right into the interview with Larry Lepard as he gives his Bitcoin price prediction. Before we dive in, don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
I got into Bitcoin in 2013, 14 when I bought my first coins, just
Oh wow.
a few. Yeah,
Yeah,
well,
I really
but
love that.
yeah, but not in a big way because and I'll tell you why. My concern was, I'd been a technology investor my whole career. I was very familiar with computers. I was very familiar with the availability of computers and, having IBM green screen. I mean, I was programming in DOS back in the early days. And as a result, I just thought, how can you have reliable money based on a computer? Computers blow up, and you unplug them, you reboot them, et cetera, et cetera. And of course, I didn't understand blockchain and I didn't understand hashing. I didn't understand difficulty. I mean, all the things that are part of Bitcoin were totally foreign to me, but I was intrigued. And so I started learning. And, from 2013 till today, my conviction went from I'm pretty lowly, I'm going to buy a little of this in case it works, and I'm pretty lowly convicted that this can really turn into real money, to I'm completely convinced that this is another form of sound money. The odds of technical failure are extremely low, like less than half of 1%. And Bitcoin really does kind of represent digital gold. And in many ways, it's superior to gold because it's easier to store and transfer. I mean, the only negative is it has an ongoing energy cost to run the network, but I think it's small enough relative to the total value of the network that it won't be problematic. So, to me, it's a better form of gold. Right now, the issuance rate of the two is about the same. As you're probably aware, in April there'll be a halving, and so the issuance rate of the Bitcoin reward will fall in half. At that point in time, gold on a stock to flow ratio, Bitcoin will be sounder money than gold. And then the other piece of it, the equation that I think is important to focus on. I mean, people ask me what can go wrong with Bitcoin. I say that, well, there are two things. One, if it technically blew up, and you got to understand how it works and what it is, and the core developers and the nodes, and there's a lot to learn. But once you learn all of how it works and you realize that we've mined over 800,000 blocks and it hasn't blown up, you start to develop a level of confidence that this thing's probably not going to blow up. It looks pretty good. So that's part one. Part two is it's got to be adopted. I mean, money is just, as Carl Menger said, money is just the most liquid good, right? And so it's what everyone agrees on is money. I mean, we only agree dollars are just a piece of paper with ink on them. We all agree that we know what they are, we know what they look like, we all agree they have value, and we exchange them. The same is true of Bitcoin, right? There are 21 million of them. You can verify them, you know what they are, you control them with a private key, etc. But if nobody gave it wouldn't be money. So the other metric I watch is adoption. Are more and more people using it? and is the value of it going up? And the fact of the matter is, albeit very volatilely, the value going up, but it's going up. And probably more importantly, and I think a better metric to just watch, number of addresses, number of users, number of transactions, number of use cases, number of applications. Those things are all growing very, very rapidly. And that combined, with the technical risk being lower in my mind now than it was in 2013, and with the use cases growing very consistently and rapidly, I'm quite convinced, and with a limited supply, I mean, it'll be a while till we've mined all 21 million because asymptotically we're approaching that number. But with a limited supply, I'm quite convinced that this is going to be the superior form of pristine collateral. It's going to be the best savings money we've ever had, better than gold. Which is not to say that I think the value of gold is going down, because I think given the monetary debasement that's going on, gold's going to go up a lot. Bitcoin's going to go up even more. Is kind of the way I see the two.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. Comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
I think Bitcoin is the fastest horse in the monetary debasement race, and I'm stealing that from Paul Tudor Jones, who's a really fantastic investor, has been very successful. So I think Bitcoin will outperform gold. But if you're 80 years old and you're putting all your wealth into one area, which I would never advise anybody to do, you're looking for a sound money to put your money into, I would recommend gold over Bitcoin, because gold never goes down 80% on a drawdown, and Bitcoin's had 4 of them. So to me, Bitcoin is more your aggressive growth stock, and gold is more your bond. That will give you income and grow, income in terms of increased value and protect your purchasing power, but it's not going to go wild to the upside unless we have a monetary reset. But in turn, it's been out there for so long, so many people hold it, it's so hard to produce, etc. That I think the biggest annual drawdown we've ever seen in gold was 30%. That was like 1 year. I think, generally speaking, a big drawdown in gold is 15 or 20%. But think about it. If you're older and you've got a lot of money, you don't want to have an 80% drawdown. You've got $10 million and you buy Bitcoin, and Bitcoin goes down 80%, which it has in the past, right? You've lost 80% of your capital. Well, that's pretty devastating. So to me, I'm a risk manager and I'm an investment manager. I've got a lot of older clients, and what we do is we figure out what the right percentage of Bitcoin for them to have is, so that if it goes down 80%, that doesn't change their lifestyle. And then, we put the balance in gold and gold related things. So, it's kind of, you're kind of, you say which is better. It's kind of like one's an apple and one's an orange. Do you know what I mean? And they each have different characteristics. And Bitcoin's definitely better money because, look, it's verifiable, it's easier to transfer, it's less cost, it's digital, we're going to a digital world. Bitcoin will ultimately replace gold. There's no doubt. Gold will just become an industrial and jewelry metal. But it's interesting. All Bitcoiners think that's going to happen tomorrow, and it's not. There's going to be in my opinion, it's not. It's going to take time. But again, Bitcoin will continue to outperform gold. So if you're a very aggressive investor and you can live with the potential drawdowns, if I were in my 30s, I advise all my kids, they've got some savings, I've said, put it all in Bitcoin. You don't need any gold. The verifiability of it all is just, it's a real mess. And there are all kinds of problems with gold. There have been fake gold. Tungsten is a metal that's very close to the atomic weight of gold. And so, in China, they found a ton of gold bars that were basically tungsten plated with gold. So, yeah. And, now there are ways to detect that. And in fact, there are gold dealers here where if you take them a kilo bar, they're going to saw it in half to protect against that risk. Now there are machines that will actually give you a surety that the thing is solid. But the point is that, yeah, gold's got a lot of problems. On the other hand, if the computers aren't working and, you're looking to just do a cash exchange on the street, a gold coin is a gold coin. Most people know what it is, and you can take a gold coin into any country in the world and go to a coin shop and exchange it for the local currency. I mean, I have clients that have 1 or 2%. I have clients that have 50%. I mean, personally, I'm about half and half. I'm 66 years old, and that feels like kind of the right balance to me. I mean, look, and by the way, what'll happen there is if Bitcoin outperforms gold the way I think it will, eventually that half that's gold will become 5 or 10%. And I probably won't sell it, but I'll say this: as I earn money these days, I don't use any of it to buy gold. I'm done buying gold. If I earn money, I buy Bitcoin.
Right.
My clients, it varies. I mean, I have people who have 1%. I mean, the only thing I really say quite strongly, I pound the table on it. I say having zero is wrong. You've got to have some Bitcoin because we don't know what's going to happen to it, but it could go up 10x, 100x, 1,000x, 10,000x over 20 years. I think it might. And therefore, if you have zero, you don't get to participate in any of that. And there isn't an investor in the world that can't live with a 1% loss. So, hey, Mr. Investor in EMA, you need to at least take 1% of your capital and put it into Bitcoin, at least. And I tend to try to push people to get to 10%. And some people get much higher, and they should. But, and like I say, it doesn't, if it's as asymmetric as I think it is, it's not like you need to take 100% of your money and put it in Bitcoin. You don't. I would never recommend that. But to have zero in Bitcoin, no, that's very bad too. So I think and I know a lot of 30-year-olds that are 100% Bitcoin. That's fine. They can do that if they want. They're taking risks, but that's okay. They're young. They can recover. They've got a very long time frame. They've got earnings power. As you get older and later in your life and you start working less and your earnings power goes down, preserving your assets becomes a bigger focus than growing your assets. You might have enough assets and what you want to do is not lose.
Yep.
You're not concerned with winning big, right? I fully expect that even before the halving, I'm kind of with Adam Beck. I think before the halving we'll probably be at 100, that we're going to kind of march from here to 100. And I think this next run with the approval and the halving taking place, it would not surprise me at all. I mean, Max Kaiser thinks the top's at 220. I think the top could be 3, 4, 500 on this next run. And then in turn, by the way, it'll correct, just as it always does. But if you kind of look at the patterns of the multiples of the bases that it forms, I tend to believe that we're going to go substantially higher than where we are today. And that's probably in a 25-6 scenario. I mean, I'm not sure that happens in 2024. I would guess the average price in 2024 might be in the hundreds somewhere. But then it really starts to ramp higher as more and more people, get involved.
Larry Lepard may have a bold price prediction of $100,000 and then on to $1 million. But he's not the only one that shares this sentiment. Michael Saylor, Max Kaiser, and Cathie Wood all predict Bitcoin's price going from 6 figures next year and then on to hit 7 figures within the next 5 years. The halving is a key milestone for Bitcoin, as its price has historically multiplied times 10 every 4 years. We'll be keeping an eye on Bitcoin's price in the coming months, as 2024 is right around the corner. What do you think about Larry Lepard's price prediction for Bitcoin and where crypto is headed in the last part of the year? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.